Hello, 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 and welcome back to the review of the trade I took on January the 16th. As you can see, this is the outlook of how the whole trade was. What you can expect today is me taking slash explaining two trades that I've taken yesterday and how I've taken them and how actually the confluences of the bias that I gave earlier that day, because if you didn't know yet, I actually give my daily bias every day between 8:30 and 9:30 New York time on NQ and MNQ, and I will show you how that bias actually played out. And that's actually also where I wanted to start with. And what I wanted to start with was that in that short of that daily bias, I told you to pay attention to 21,220 and 21,180. And that is this gray box over here. Keep these price levels in mind while we are going to do our review, and you will see something very interesting happen by the end of it. So I promise you, you will really like this. Alright, so let's have a look on 9:30 when we actually opened. So we had a gap of 120 handles, 120 and a half to be precisely. If you have watched ICT's latest 2025 lectures, he mentions that when the gap is above 120 handles, that you should be looking at only trading to the 25%. Well, I myself do not precisely use this metric. I do take it in consideration, like when gaps are bigger than 120, I actually tend to look at the upper half instead of the whole or opening range gap itself. So let's see what happens when first presentation is formed. So at the 9:33 candle, first presentation is formed, and we see that also a limit entry has been placed. To take into consideration is that you see a small volume imbalance over here, meaning that instead of placing my stop on this candle's high, due to the fact that it is a volume imbalance, I will place my stop loss on the candle's high of the volume imbalance itself, and that the entire fair value gap, the first presentation fair value gap, is this wick to the opening of that candle instead of this high of this wick to this low of this wick. So with 16,500 in our current account, we are able to put 7 contracts on, and we place a limit order. We get tagged in immediately, well, immediately 2 minutes in, and you will see that we have a good reaction from it actually. Like, yes, the wicks stay inside, but we close below all the time. I have my first take profit of 6 contracts over here. Why is that? Because, well, currently you see that we cannot really take profits at 12.5%, 25, 38.5, or 50 because we already, well, we are very close to that. So that means that the earliest target that I can hit is a minimum handle range that I actually target, and that is 40 handles minimum. So, alright, let's see what happens. As you can see, after that this fair value gap is created, we don't go to our target immediately. I have to admit that I actually got a little bit anxious when I saw this, that we closed above. But you will see that we actually respected consequent encroachment of this wick. So the wick that is very large here, and that's actually also the wick of our fair value gap, is being respected. We remain in that lower quadrant, and after that happens, you will see that we actually go to our target, like with some very heavy downside movement. From this moment on, I actually just had a runner on. So because I closed 6 contracts, I set my stop to break even, as you can see. And we will just barcode a little bit. It's very interesting to notice that orange gap. This orange fair value gap is actually a Reaper fair value gap. And not just any Reaper, no, it's the first fair value gap presented of the new year. This is the, well, not new year, this is the one of the 31st of December, if I'm correct, or the 30th of December. You will see that price will move around a little bit here and doesn't do a lot. Eventually, we get stopped out here at break even at 11 o'clock, and we actually move above the first presentation fair value gap. And what do? We take out the liquidity over here. And what is this liquidity? Well, we have several points of liquidity. If you have followed the 2024 mentorship, you will know that ICT speaks of a lunch macro being activated at 11:30. In this case, the macro already started a little bit, and it took out these highs that were created after 10, and this high where a lot of people potentially would have moved their stop loss towards. And what liquidity are we left with? We are left with these equal lows over here. So you can also see that my algorithm, once we closed below the first presentation again, we placed the limit order again with 6 contracts here to go to break even and then continue. So as you can see, we get tagged in over here. We do had to endure just this little bit of drawdown, but it was okay. Again, it respected the wick of that first presentation candle, and immediately you see how heavy it moved down again. So we had 6 contracts profits very easily. We only were in the trade for, as you can see, 11 minutes till target. Here we were in the trade for also 11 minutes to target. So we put our stop to break even. Nearly get taken out over there. But we see that price just continues to keep moving. A little bit sideways. But then, around the PM session, you will see that we actually start dropping. And it's very interesting to see that we actually move above and below these new day opening gaps and this Reaper fair value gap. And from that moment on, we just continue moving down and below these price ranges. And eventually we drop down all the way till the end of day. So as you know, I close all my limit orders by 4:30. And one thing is very interesting to see. So remember this box that I mentioned, so the 21,220, 21,180. I close my orders here, but look what happens after. We just keep moving up after. So this is a part of which I actually arrive my bias from, and it has to do with the new day opening gaps and new week opening gaps, and where my draw on liquidity is. So my runner actually got stopped in my draw of liquidity, which was this box. That's why I mentioned it on the short. And I thought that it would be a very useful little thing if you listen to my shorts carefully with my daily bias. So it was a very nice day. We made, I think it was 1,600. So it was a very good day for me. It was around 10%, a little bit less, I think, or exactly 10%. So yeah, what can you actually derive from this? Well, you can derive from it that the first presentation, when utilized correctly, is a very strong entry model that is being taught in the 2024 mentorship. Next to that, the new week opening gaps and new day opening gaps are actually what are driving the bias of the market. And what you also can derive from this is that you should actually watch my daily bias that I put out every day at 8:30, between 8:30 and 9:30 New York session time. Because sometimes I do not trade on a day, and I mentioned that in my daily biases. But I also, if I do not trade, I still say, okay, I favor this momentum to the downside or upside. And most of the times it has been correct so far. So if you enjoyed this, give this video a like, subscribe if you want to be kept up to date, and I talk to you guys next time. So bye bye.
Morning light, markets take their flight. Nasdaq opens tight, always